Hello everyone, it's HiCom Accounting here. It's another day of tax essentials for business. Today we'll cover 4 most common types of business structures in Australia. We'll go through those structures and compare them to make sure you will choose the most suitable structure for your own business. One of the key decisions you'll make when starting a business is its structure. Your choice of structure will depend on the size and type of business, your personal circumstances, and how much you plan to grow the business. You can change your business structure as your business grows or your circumstances change. When you decide on a structure for your business, choose the one that best suits your business needs. Consider each option carefully, as there are key factors and rules to consider for each structure. Your business structure can determine your tax liabilities, responsibilities as a business owner, potential personal liability, asset protection, and ongoing costs and the volume of required paperwork. It is a good idea to discuss your proposed structure with your tax accountant or business advisor like us before starting your business. The 4 most common types of business structures in Australia are 1. Sole trader and individual trading on their own. 2. Company, more complex, limits your liability because it's a separate legal entity. 3. Partnership, made up of 2 or more people who distribute income or losses. 4. Trust, an entity that holds property or income for the benefit of others. Sole trader. A sole trader is the simplest form of business structure, and is relatively easy and inexpensive to set up. As a sole trader, you are legally responsible for all aspects of your business, including any debts and losses and day-to-day business decisions. As a sole trader, you can still employ people. If you are looking at starting your business as a sole trader, consider the following key elements. Is simple to set up and operate. Gives you full control of your assets and business decisions. Requires fewer reporting requirements and is generally a low-cost structure. Allows you to use your individual tax file number, TFN, to lodge tax returns. Doesn't require a separate business bank account, although this is recommended to make it easier to keep track of your business income and expenses. Requires you to keep financial records for at least 5 years. Has unlimited liability and all your personal assets are at risk if things go wrong. Doesn't allow you to split business profits or losses made with family members. Makes you personally liable to pay tax on all the income derived. Partnership. A business structure made up of 2 or more people who run business together, and distribute income or losses between themselves, but not as a company. There are 3 main types of partnerships. 1. General partnership. Is where all partners are equally responsible for the management of the business, and each has unlimited liability for the debts and obligations it may incur. 2. Limited partnership. Is made up of general partners, whose liability is limited to the amount of money they have contributed to the partnership. Limited partners are usually passive investors, who don't play any role in the day-to-day management of the business. 3. Incorporated limited partnership. Is where partners can have limited liability for the debts of the business. However, under this type, there must be at least one general partner with unlimited liability. If the business cannot meet its obligations, the general partner, or partners, become personally liable for the shortfall. If you're looking at setting up a partnership structure, consider the following key elements. Are relatively easy and inexpensive to set up. Have minimal reporting requirements. Require separate tax file numbers, TFN. Must apply for an Australian business number, ABN, and use it for all business dealings. Share control and management of the business. Don't pay income tax on the income earned. Each partner pays tax on the share of the net partnership income each receives. Require a partnership tax return to be lodged with the Australian Taxation Office, ATO, each year. Require each partner to be responsible for their own superannuation arrangements. Must register for GST if turnover is $75,000 or more. Company. A company business structure is a separate legal entity, unlike a sole trader or a partnership structure. This means the company has the same rights as a natural person, and can incur debt, sue and be sued. As a member, you're not liable for the company's debts. Your only financial obligation is to pay the company any amount unpaid on your shares, if you are called on to do so. However, directors of the company may be held personally liable, if found to be in breach of their legal obligations. Companies are expensive and complicated to set up, and generally suit people who expect their business income to be highly variable, and want the option to use losses to offset future profits. There are key features you should know if you are looking at starting your business as a company. Is a separate legal entity. Is a more complex business structure to start and run. Involves higher setup and running costs than other structures. Requires you to understand and comply with all obligations under the Corporations Act 2001. Means that business operations are controlled by directors and owned by the shareholders. Means company members have limited liability. Means the money the business earns belongs to the company. Requires an annual company tax return to be lodged with the ATO. Requires you to complete an annual review and pay an annual review fee. Directors are required to complete a declaration of solvency each year. Means wider access to capital. Must register for GST if turnover is $75,000 or more. Registration threshold for nonprofit organizations is $150,000. Some of the more common obligations include: update ASIC within 28 days of key changes to company details. Keep financial records. Understand and comply with all your obligations as a director. If you think a company is right for you, don't hesitate to contact a tax agent like us to register your company. Contact us at www.HiCom accounting.com.au. Trust. A trust is an obligation imposed on a person, a trustee, to hold property or assets for the benefit of others, known as beneficiaries. If you want to set up a trust, keep in mind that trust structures can be expensive to set up and operate. Require a formal trust deed that outlines how the trust operates. Require the trustee to undertake formal yearly administrative tasks. If you operate your business as a trust, the trustee is legally responsible for its operations. A trustee of a trust can be a company, providing some asset protection. We detail the differences, as well as some similarities among the above four structures, as followings. Is the structure difficult to set up? Is it expensive to register? Do I retain complete control? Are there complex reporting requirements? Will my assets, house, etc., be under threat if my business goes into debt? Do I receive full profits made from the business? Can I employ staff? Do I have to pay myself superannuation, workers' comp, etc.? Can I change the legal structure easily? Do I have the ability to plan tax through avenues like income splitting? Is it easy to raise capital? Is it easy to dissolve or exit? So for the summary, we provide the following table to help you choose the best suitable structure for your business. I strongly recommend discussing your proposed structure with your tax accountant or business advisor like us before starting your business. Feel free to contact us when you are ready.